And we also spoke with Amit Pandey, who's the Vice President, Financial Institutions Group, Moody's, and Karthik Srinivasan, the Senior Vice President and Group Head, Financial Sector Ratings, ICRA, on India's growth story and what's really in store for the banking sector in this new term of the government. Let's listen into them.
I think from a banking sector perspective, what we look for is a political continuity, and economic policy continuity, and to an extent incumbent government is back in place, we expect the same to continue. So on a wholesale side, we think that there would be some more thrust in areas like infrastructure, manufacturing. The climate change is a big issue, so the whole transitioning is likely to happen. And also we think the financial deepening story, which is giving more credit to the SMEs and the retail sector, is likely to continue.
Lastly, the same. We expect continuity in the policy directives on the financial sector. So to that extent, we do expect the government's focus on housing and infrastructure to really continue, which would mean, some way you would have to use the banking system to ensure that you are able to pass on or at least continue on those initiatives. So as such, we're not really expecting any major detour in terms of the way forward for the BFSI sector as such.
World Bank has recently said that the growth will continue at about an average of 6.7%. What are your thoughts on that as well?
So I think if you really look at from a global setup, for banking system, what really matters is the nominal GDP growth, because that is tied to the credit growth in India. And our view is that if you look at the nominal GDP growth from a perspective, India would be 10-11% kind of a growth story for extended period of time on nominal GDP basis, and which will give banks ample opportunity to finance this growth, and the profitability of the sector is also improved. So it would be not only growth but with profits. Now if you just contrast it with what is happening globally, you would find a lot of banking systems are facing challenges. So in Europe we have a negative outlook on lot of banking systems in France, in UK and in Germany, because of the tight monetary policy, the economic growth has really suffered. Similarly in US, the whole commercial real estate market is suffering because of policy tightening, and which has implication for the banks, and China has its own set of problems related to deleveraging and property sector and so on and so forth. So if you marry the growth dynamics in India along with what is happening in the banking sector, it really stands out as an outlier.
Last said, in terms of GDP growth, we do expect the country to continue in 6.5 to 7% kind of growth rates for next couple of years. So that would definitely give a lot of opportunity for the BFSI sectors to expand on credit. And as Amit said, the banks and the non-banks are possibly at the best of their financial health over the last 10 years. So that should provide them equal and more than equal opportunities for them to cherry pick and continue on the growth path with fairly strong profitability and asset quality numbers.
All right, so continuity, it seems, is what India Inc. largely demands. In fact, we also caught up with K. Ravichandran, EVP and CRO of ICRA, and he says that amidst the ongoing speculation, it is anticipated that infrastructure spending will maintain its momentum. Furthermore, he also added that the government's potential shift towards rural infrastructure could offer a much-needed boost to distressed areas. Let's listen into a slice of the conversation that he had with my colleague Ishwarya earlier in the day.
Infrastructure spend will continue at the current pace, while there has been a lot of discussion around providing stimulus for the rural and lower strata of the society because of the distress being faced by them. While certainly there could be priority for the government, infra spending is something is here to stay. Perhaps over the medium term, the government outlay may moderate at the current level, and private sector may be asked to pick up the tab. It means they will have to fund from the market, bond market as well as the the equity market as well as the bank loan market. But overall infra spending per se, if one is looking at, I don't think there will be any slowdown in spending. Just that mix could be changing slightly, since the government would also have its fiscal consolidation priorities, to the extent that they may not have unlimited bandwidth to continue with the financing.
So in any particular pockets, you see any changes or some sort of push that the government might make this time around? In terms of the infrastructure sector overall.
Infra, I mean, already, in terms of budget outlay, there is a minor moderation. I believe in the final, budget, there may not be material change, compared to what we have seen in the interim budget. Otherwise, with regard to road and, railways and, defense spending, etc. So these are the three major sectors where, government has been providing a good amount of capital, a good amount of outlay. I'm not looking at any material reduction for the current year per se.
In terms of finance in the infrastructure project, do you see that picking up?
Yeah, so with regard to infra financing, today, the PSUs have been playing a very important role, PSU banks and NBFCs, I mean, while the private sector, NBFCs, infra finance companies have been scaling down their,